In this video, learn how to learn from your costly trading mistakes in this new trader education video series.
Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community.
See how a junior trader creates the Anti Playbook trade to help eliminate his bad trading and bad trades that are holding him back as a trader. Let's dive in.
So this is my Anti Playbook, or One Bad Trade Playbook. The play type I chose is going to be chasing momentum as it pertains to momentum scalping. And in particular, I'm going to be looking at LK on April 2nd. And this is definitely one of the trades that stick out to me as kind of just really mismanaged in my trade history.
Okay, let me set the scene again. So this is a new series that we're rolling out. The idea is to create what you said is the anti-playbook. Normally what we do is we create a playbook of trades that make the most sense to us. So at the end of each day, all of our traders here find a setup that made the most sense to them, and they archive it with variables and put it inside their playbook. And this playbook becomes their trading business. So this is an exercise we do every day. And what we're doing new right here is we're doing an anti-playbook. This is the trading that we need to eliminate from our trading. These are the trades that we need to eliminate from our trading. And if we can both build from our strengths by trading our playbook, and we can eliminate the trades that we don't want to take, okay, we can eliminate our bad trading, we can eliminate our bad setups, then we can make significant progress with our trading as well. Back to you, David.
I chose to do something related to momentum scalping because it has been something that I feel like I've had a lot of winners in. But when I went back and looked at the setups that I lost the most in, they're definitely just setups that I think weren't working. But all my biggest losers were kind of related to chasing momentum. So that's why I kind of decided to do this on something that's based on momentum scalping. Even though I've still found a lot of success, I definitely have a lot of things when I look for the setups of momentum scalping that have really put a damper on my end of the day P&L. So,
okay, but you're good at momentum trading. You're not so good when you chase your momentum trades. Is that fair?
Yes.
Got it.
For the big picture context, this is back on like April 2nd. LK is a Chinese company, and they're kind of known for internationally as the Starbucks, so to speak, of China. And they had really great growth and great numbers, particularly in like quarter 4 to around early quarter 1. They had phenomenal growth, especially with their stock price. And I'll show that in the daily chart in a bit. But as the coronavirus started coming in, of course, they naturally pulled back and around like February and in March. But what really killed this company was on April 2nd, it got revealed that the CEO and several employees, they had fabricated transactions of as much as $210 million, which is more than half of what the company has said it's done in actual transactions, which is pretty much just everything that the company is valued on. And pretty soon it cratered from $25 to a low of $3.74. which is a really big drop, over 80%. There was even recently talks about it being delisted, but that's not pertaining to this trade. But
okay, everybody who actually watches this in the future isn't going to know as much about trading as you. And so when a company is fabricating its earnings, in short, that's really bad. So how do you know what the real revenues are for this company if you're a big money trader and you're sinking $100 million into this idea? Hey, this is going to be the Starbucks of China. And you catch wind that, hey, they're fabricating the results. Well, how do you bet a lot of money into that? How do you put a lot of money into that? How do you explain to your shareholders, to your boss at your hedge fund or your institution that you're invested in this company that is engaged in this type of behavior potentially? Those are the types of stocks you're gonna want to get out of pretty quickly. And so that's the reason why this has traded. That's why this gap's down so much because of that. And we would call this a changing fundamentals trade. Yesterday, we knew X about the company. Today, what we knew about the company is much worse. In fact, we don't even really know what this company really is and what it's really doing, given this breaking news. So this is a typical, when we read a headline like this is typical really bad changing fundamentals news in a company. Sorry to cut you off.
No, exactly. That's exactly it. So I think it's going to be really clear when you see the chart how big of a deal this was.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
This is the daily chart. As you can see, I was doing pretty well, pulls back, coronavirus kind of news, and this is where the news hit, and you can just see it drop here. On the 2-minute chart, it's pretty severe. Yeah, not much else to say, but this is pretty big drop here. I'll get into like the kind of like the good part of the trades of that I was in, So I basically was on the long side here. I noticed there's a change in character as I started holding, and I was kind of looking for covers because it had fallen so much, just kind of adding on the way up against the lows. And then it starts squeezing limit up off the open, and I'm able to kind of catch some of that. And I'm taking profits on the way up, not really trying to push my luck, but I was kind of just adding a little bit with the momentum all the way up. And I think that's like kind of like me momentum scalping well, being patient, really seeing it change in pattern. Like I think this is pretty interesting right here because it's so different from this entire fall on the left side here. I think that change in character is something that's really different. And then on the tape, on the open, when it pushes $5, you can really see that there's like size at $5, and then it kind of just tests it once, comes back down a little bit, and then breaks through the second time. And it breaks through fairly convincingly. Those are good opportunities to momentum scalp. But to get to kind of like the chasing part in the momentum side, you can see here, it goes limit up a couple times, and once it breaks 10, it has a really noticeable change in its tape and in just how it's moving and where the pressure is coming from. As soon as it breaks 10, it almost instantly just pushes it back down. And I kind of get out of my long, and I should have immediately hit short here because I kind of was expecting it to turn at some point. I thought that this was pretty clear, just kind of like short squeezing and covering, just because it was on SSR and because I come down so much. But I couldn't really get anything in because when a stock is on SSR, or that basically means it's you have to put an offer out onto the market, like a limit order out, and you can't just market order a sell order or short order. So I couldn't really get anything in onto the downside, and I started getting really frustrated that I didn't really catch the turn, and I felt like I didn't really make enough. No, so I was long all the way from the base here, kind of longing into limit ups, and then I was being very careful after this second limit up to just kind of like let it go and wait for the turn. But I missed the turn, and I couldn't get. I didn't really get. I wasn't able to get short as it kind of it turned really fast. This right here was actually a halt. It halted right before it broke 10, and then it pretty much broke 10 out of the halt and then crashed down. And I wasn't able to get short on that. And that, I think, was frustrating to me. Or not, I think. That was definitely frustrating to me because I really felt like this was something I should be kind of really... I felt like this was like a really big in-play name. Yes. So on the way down, it actually halts twice. And I couldn't get in to the second limit down either. And then after it gets out of the second limit down, this is when I really make the mistake. and I'm just trying to make up for the lack of profit I had made earlier, and I just kind of slam in out of the halt into the momentum, and I thought it was pretty good because it looked like there was momentum out of the halt, but I ended up getting wicked out. And the tiers on my sizing here, yeah, definitely. I mean, I think it's fine to like kind of test it again. I hit in a lot of size after it's already moved so much. Like there's one limit up here, one limit up here, another limit up, a limit down. Like how, I don't know, like it's moved so much. There needs to be some sort of time, I think. So that's like mistake number one, is that I think I'm running to the edge of how much the momentum can really go. If you look at the time, it's almost 10:20. It's no longer the morning. It's already gone limit up and limit down quite a few times. The volume's naturally going to come down. The momentum I'm trying to push, I feel like it's kind of risky. So that's definitely number one. The number one thing I did not factor in. And then number two is, because of number one, I was just way oversized. I was multiple tiers into this one trade, and I end up really just getting wicked out. It doesn't look like much on the chart.
What's going through your mind? So you see that there's an opportunity to short at 10, and now there's a couple limit downs. You've missed that, so you're frustrated, and now you're banging in with lots of size. What's going through your mind that is causing you to hit in with a lot of size at a really bad price? And how do we stop you from doing that? This strikes me as very dangerous. I mean, it could have been limit up after you hit for size immediately, as we've seen many times, even if the stock was going to eventually trade a lot lower. But I think we need to understand what's going through your head, what you're thinking about in real time, and understand that, so that, like for instance, there's plenty of times I'm sitting there trading, and not plenty of times, but there are times I'll sit there trading and I get upset. I know I'm on tilt. I can feel that I'm angry. I can feel that I'm frustrated, for different reasons. I tend to be motivated by things that are unfair. I'm trained as a lawyer. I really respond negatively to things that are unfair. So any kind of trading that sits into some subcategory of unfairness, and I think I'm a pretty rational person, but if I get, if my stop is going to be 30.01 and I'm short, and I end up getting a fill at 30.36 or 30.41, that tends to bother me as to getting slipped like that. Or if I'm long and I'm going to get out below 30 and I don't get out until 29.56, and I've lost way more than I thought I should have because I feel like I got slipped. And we could go through a litany of things that strike us in real time as unfair. That's the way that I'm wired. But I've learned over the years, and I practice my mindfulness every day. And mindfulness, unlike the way most people think about it, is not just about you being able to be calmer for longer. But one of the things is that it causes you to understand and observe your thinking and emotions in real time better. And so I'm able to sit there at times and say, I'm pretty peaked. I'm pretty frustrated. This is really ticking me off. And I have strategies and things that I do that help me so that I don't cause myself. These are just unforced errors. These are things we have to be able to control, that which we understand to be pretty bad trading. And so because you're mad and frustrated is not a reason to to get in, and you're going to have to sort of recognize that in real time and be able to deal with that. And you should sort of feel it. You should feel it coming. I forget what trade we were trading the other day. Had a huge squeeze, and it was just way overbought, and I knew it just sort of come in, and I was peaked. I was pissed. But over time, I recognized, okay, I remember this feeling. Sit with this feeling. Sit with it. You're upset. What do? What's your best trading when you feel like this? Oh, my best trading is, this is a really good opportunity that's setting up. Okay, I've shorted and they've run me over a bunch of times and I've lost some money, but I'm so pissed. This is a signal that this is way overbought. This is a signal that there's just something wrong with the pricing for this stock. And there's probably going to be a great trade that comes up. And all I need to do is just watch the turn, watch the level 2 really closely. And I'm gonna bang in with really big size to capture this thing to go back to where it should probably be trading at, or some pull-in, or the mean, or the and so that's a signal to me that if I just calm down and I just default to the type of trading that I ought to do, that I can get in. I would suggest, if you're starting to feel like this, for your trading, you should say, whoa, okay, this is how I get in trouble. Whoa, stop. I've got to really have some time go by. I've got to really see on the tape the opportunity. I've got to be a little bit extra careful here. Maybe there's another leg to the downside with momentum, but this is when I get in trouble, and I got to recognize that. Does that make sense? It's information. It's total information that you need to be using.
Yeah, and that's something I feel like I really kind of want to get better at. Every time I'm actually in the situation, it's so easy to kind of recognize it and then brush it aside, because I feel like this is an opportunity that won't come again. Like, this is just too good to give up. Like, even if I'm a little tilted or maybe emotionally compromised, I need to trade this. But more often than not, it kind of ends up being not a good idea, and it ends up hurting me.
Yeah, it's not a good opportunity yet. Mm-hmm. That's the signal that your emotions are giving you. Mm-hmm. It's not a good opportunity yet. You need to see more.
Definitely patience is something that kind of comes into play here. I think once if I miss this trade up here and I'm not getting filled on the way down, and obviously because it's on SSR, by the time I get filled, it's probably retracing or bouncing back a little bit. So like, I'm going to be naturally working against momentum to the downside. Like the setup, I think if I miss the great setup and I'm trying to really put on a lot of size, I really just have to be patient and find a better price, a better setup, something where I'm not getting in, basically just hitting the bottom and hoping for a limit down or something. This trade just reminds me of 2 lessons, kind of just like really having to be patient if I miss something, and really ingraining in myself that there's always more opportunity in the day, and there's always going to be another chance to potentially get into a stock. What actually ended up happening, and the reason I think this trade really sticks out to me, is because on the way up, I was doing great. I was up about at least 2 times my stop, and then this loss here actually puts me in the red, which is a really big loss. That really upset me. Because of that, I ended up making an even worse trade, basically going from really doing great on the day to kind of being upset I didn't make enough, to being flat, to stopping out. On the same day, there was some news in the oil sector and the price jumped. This is just an example of how often I kind of can get myself into really bad positions. Sometimes here in Oxy, after the news hit, it started being very bullish and it went limit up. And then once again, I kind of just hit it at the lows, or the highs in this case. And just when it's overextended, basically, kind of just watching something go up and then hitting in when it's done, instead of hitting in earlier or, after it's overextended, kind of just waiting for a better setup here. This ends up stopping me out. And these 2 trades are really combined because I think...
You got long, you mean? You got long there.
I went long here, and then I ended up having trouble getting out because this was also an SSR.
Yeah, look, when you see something that's that extended over a short period of time, it's at a bad price, you have to find your protection. You have to find where, on the long side, you have to find where the buyer is. There's too much risk that you could lose too much too fast without understanding where the buyer is and where you're going to be wrong on the long momentum side for this particular trade. And so if I see something spike to the upside, I'm going to really hone in on the level 2. I'm going to really hone in on the tape, and I'm not going to buy this unless I can find protection. And protection, when something is this vertical, is going to be a buyer on the tape that I can spot, a level on the tape that I can spot. And if I don't see that, then the trade is not a good trade. There's too much risk for me to get long. And if the stock just even goes much, much higher, almost always, I'm okay with that because it wasn't in my playbook, it didn't set up. And what I really like about this trade for you is that you're really seeing your anti-playbook. I mean, this really is an anti-playbook. You're really seeing the trades you shouldn't be making. You're really seeing not only the trades you shouldn't be making, but trades that cause you to spiral into a mood and a mindset that is you at your worst. And all of us at our worst are not very good. But we don't spend that much time at our worst. And what we don't want to do is have lots and lots of trading being done, lots of money at risk when we're at our worst. We're all going to have periods when we're at our worst. We want to minimize that. And so, for you to recognize what can lead to you at suboptimal trading and even worse, spiraling into getting stopped out of the day, from a good day all the way. I mean, that's how significant this is. This is you having a good day, doing some anti-playbook trading, putting you in a mood that causes you to do more anti-playbook trading, which gets you stopped out, which would really piss me off between the two of us. Because it's just an unforced error. I mean, if you're going to lose money, you want to lose money on a trade where you put a lot of risk on that made a lot of sense to you and just didn't work out. Fine, I'm okay, I got stopped out. It was one of my good trades. Shark had a trade like this the other day. It kind of went against him. He liked the trade, he put on size, it didn't work out. He didn't feel like there was anything he could do about it. Lost $150,000 plus dollars, but that's okay, because that was worth it. I wouldn't say he's happy about getting stopped out, but those are the days you get stopped out.
And I think that's the key of it, is like when it comes down to it, like when I look, like it has to be a trade, like when I look back on it, even if I'm upset about, losing X amount of money, I have to still kind of be able to look at the trade and be like, well, it was a good trade. Like, more often than not, this kind of setup ends up working. This is a good setup for me. The two trades that I just mentioned, I don't think they were good trades. I was just kind of chasing price, getting bad fills, really just trading on my emotion and not on any sort of fundamentals. In terms of like some lessons that I learned from, kind of going through these losing trades, momentum scalping is definitely my favorite way to trade, and I've had some really big winners, but it's also by far my biggest loser because sometimes I don't always take the best setups, and I think given how fast the prices can move in a high momentum environment, it can be easy to lose quite a lot, which is why it's even more important, I think, to be really selective or to be patient and really pick your spots. And in these two examples, I'm a little overeager, I'm emotionally compromised, and I'm trying to trade out of a hole. And all three of these things aren't things that should kind of affect my mindset when I'm trading, and they were affecting my mindset when I was trading there. I kind of narrowed it down to three different things. One, I'm like making these mistakes when I'm momentum scalping. I'm either trying to trade out of a hole and trying to hit something with no real catalyst, or the momentum is done, and on the tape, it's not clear that there's still momentum. And that's, I think, is a really big red flag. That kind of that's like over trading midday, right? Like there's nothing really going on anymore, but I'm just kind of trying to force an idea to happen. And I think that's when I kind of sometimes get myself into trouble. Secondly, I'm trying to trade a stock because I'm emotionally compromised. Like the trade I made in LK, I really feel like I should have made more earlier, or I feel like I missed the move and I shouldn't have missed the move, so I need to make up for it then. And that's when I really kind of start, getting into a bad habit of chasing and not really letting go of my position fast enough, because I'm really trying to catch up to something. And then finally, in these situations, because I'm too overeager to trade out of a hole, or just not in the necessarily right mindset, I'm just too oversized that I can't really sustain a natural spread. So even if, let's say, the trade does work out, a lot of times these might, tick up a couple cents or something, or more so. And I can't be so oversized, so eager to, make up for something or chase the momentum that I can't handle, a couple cents.
Let's go over 2 ideas. One, good exercise for you to be doing is for you to visualize a stock like Oxy, like LK, that has dropped, in the case of LK, quite a bit in a short period of time, and you feeling the FOMO to bang into it and try and short a little bit more for another leg down before actually seeing the momentum that you can spot on the tape for another leg down. So, first exercise is visualization. See that Oxy spiking up. Feel that you want to get long at a really bad price. And then have yourself, through self-talk, say to yourself, I'm not going to get long unless I actually see the buyer that gives me protection at these elevated levels. I'm not going to make a new momentum trade higher in this Oxy until I see that after something is spiked up. I'm not going to, in a stock like LK, after it's shot down real fast, and I feel this FOMO to bang into it and catch the last leg down. I'm not gonna do that unless I see a fight, some momentum on the tape that's indicating that it's gonna have another move down, some protection that I can trade off of. Okay, I'm not gonna take that trade until I see that. So you need to visualize those scenarios where you feel that FOMO, that over anxiousness to get in at really bad prices. Okay, and there's a really great blog post written by Bruce Bauer, which I know is in our training program. I'll resend to you. It's soup to nuts on how to do visualization exercises, and I know you how to do them, and I won't go through that right now, but the idea is you need to be in that setting and feel what it's like, think about what your thoughts are, feel the temperature of the room, feel the trading seat that you're sitting in, go over what the visuals are, what the sounds are in the room, how you're feeling. You gotta go over that in tremendous detail. Right now, you have one way that you react. It's one way your brain is wired right now for those scenarios, which is to bang in and to be over anxious. You need to give yourself another path. You need to give yourself another way to think in that moment. The way to do that is through visualization exercises, which will get you to give you that second option, which is, well, wait a second, I don't need to be over anxious right now. I can wait. I can wait to see what I need to see develop. And only after I see it, and only after I see the protection, and only after I see the variables that I'm looking for develop, will I then get into this trade. And that will give you the wiring in your brain in real time to be able to, as you say, be patient and do the right thing. And then the second thing is, if you catch yourself making 2 over anxious trades in real time, you should get up and go take a walk. You should have that as a rule. If you do it, get off the desk for 10 minutes, reset, and only till after you have reset, come back and do it. You need to find solutions to get rid of this type of trading. This is a good step, at least you acknowledging, recognizing, internalizing when you trade poorly, but we need to take a couple of more steps forward, giving yourself another way to think about this in real time and a rule in case you do it. We all find times when we're not at our best and are making trades. The best traders, the elite traders deal with this too. They have solutions to minimize the effects of when they're in a bad state so that they keep more of their profits. You're not alone. There's not something wrong with you or anyone else who does this. This is all the types of stuff that elite guys are still working on and still putting rules in for their trading. All right, I think this is great. I think this is a perfect example of the anti-playbook trade. When we get rid of this and you're trading, you'll do even better.
Hey, go ahead and click our subscribe button so you don't miss any of the videos they were producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.